Good morning, everyone. This is Ryan Entner with your Thursday, May 23rd morning market commentary. Quite a few things to cover here quickly, but again, let's start off as we always do with the 1 to 5 day map. As we see on this map, once again, not much change here, staying pretty wet for just about all the areas in the Midwest. In regards to corn, looking at this map, we could say that not only does this rain cover us through this week, but the drying out period and everything after that, you're getting in the category now where areas of the Dakotas and parts of the Minnesota will be making prevent plant decisions very soon. So this forecast could already be enough for those areas to take you far enough out to make prevent plant decisions. And trade is going to factor that in right away. In fact, they probably already are, which is why we've already rallied to the point we have. This morning, we got weekly exports for corn. Even though ethanol was very strong yesterday, that came in at plus 4%, and all we needed for a bullish number was plus 0.1. So ethanol came in with a much needed recovery, but exports not quite there yet. We have 626,000. You'd need a number of 1.0, 1.2 million for the trade to see exports as a positive story. So 626 is not quite coming in for what's needed there for corn. Whereas yesterday saw a little bit less fund buying. By the looks of it, maybe you could say it was cut in half. So without the fund buying, it may be tough to get past that 403.25 resistance in July corn. But we'll keep an eye on this. With the right USDA news and enough fund buying, that level still can be passed. Over in beans, this is where all the excitement's going to be today. We'll start off with the news we already have. And what that is weekly exports of 541,000. Put that in the same category as corn. It's not horrible, but it's not supportive to the market. In fact, the immediate bean reaction was to go down as soon as they saw that number. Still not nearly enough for what we need to meet USDA expectations. But now all the excitement comes here for the beans on this USDA aid package. The earlier amount talked about of $2 a bushel back on Tuesday, that would imply a lot of these corn acres, instead of prevent plant, would go to beans. There is now some speculation that your $2 a bushel payment on beans may still be, that could be your accurate number, but you might be limited on only as many acres as what you planted in beans in 2018. So the fine details of this are very important because, again, if we're paying $2 a bushel in beans on unlimited acres, that could be millions of acres going from corn to beans. If you're limited to your 2018 plantings, again, 2-3 million acres not going to beans. So a very important story. That'll be pretty much the only thing we really need to watch on beans today. But you also have to look through the details because that could mean millions of acres of difference in total bean planting. Over in wheat, exports similar to the other two, just okay to say if anything at best. We would have needed a number of 700,000 or more to be supportive, and just like the other two markets, didn't quite reach that. There is some concern that Monday's good to excellent rating could go down. Now, we want to put that into perspective, though, of course. It's still at 66. If you were to drop it 2-4%, you still wouldn't get anywhere near the 5-year average of 45%. So could be short-term supportive, long-term. The good to excellent rating is still definitely strong enough to get to warrant holding off excitement on upwards movement in wheat for now. Over in cattle, mixed cash cattle trade yesterday, same 115s we saw on Tuesday, add in a few 114s as well. That moved futures down just a little bit here. It's still likely that speculators want to try and cause a bounce in this market, but again, yet another dollar lower cash trade. That's going to make it tough for speculators to bounce this cattle market too quick. Now, seasonally, we would expect a bounce over the next 4 weeks, and again, seasonally, that would be expected to start this week. One last thought on that is that if the seasonal drop occurred 2 to 3 weeks late, maybe our seasonal bounce will also be 2 to 3 weeks late. So although it's not occurring this week as we would normally expect, it's too early to say that that is too late or that it won't be happening. So we'll just keep a close eye on cattle. General sideways futures trade would be expected as long as cash stays at the 114, 115 level. So that's what we have here for Thursday. If you have any questions, give us a call, 800-551-4626, or visit us on the web at allendale-inc.com.